We are live from the JP Morgan India Investor Summit, and with us is Kaustubh Kulkarni, Senior Country Officer of India at JP Morgan. Kaustubh, so good having you. Thanks for having us at your conference.
Thank you so much, Niraj.
So I would love to I'm given to understand that it's a packed conference, both from the investor side and the corporate side, so much so that you had to tell a few investors that, hey, the interest is quite wide there. I would love to understand from you, Kaustubh, how do you think about this kind of response from the international investing community, and what does it mean for the nature of investors who are looking to come in or increase their exposure to India through you? Is this something that is not seen too often?
Yes, so Niraj, you're right that we had to say no to a number of investors actually this time around last week.
Wow.
Because I think the infrastructure, while we have created a lot of arrangement and space, but we probably had 25% more requests than what we could accommodate. So I think that's one in terms of investors who wanted to join. The second thing is there is almost 75% of the investors attending are on the equity side, about 25% or so are on the credit and debt side. So India, I think, is saying good interest, and our conference is also saying good interest from investors, primarily on equity, because it's our equity conference, and then also from debt, because India is becoming relevant from both foreign investors and, of course, domestic investors on equity and debt as well. So that, I think, is the narrative. But more important, if you think through why is it that we are seeing such an enhanced level of interest from investors? You need to, for us to understand that, just look at what happened in 2022 and what is happening in 2023. In 2022, you had both the Russia development and also the Fed tightening, as we call it, right? So whenever you have a major spike in interest rates, normally emerging market equity performance takes a hit. And you saw that in 2022. But last year, it was a double whammy because both Russia and China had substantial negative performance on the equity side. So if you are an emerging market equity investor, then most of them did struggle because they had poor performance last year. The only thing that reduced that poor performance is exposure to India. So that theme got very formed in their mind in 2022. And then fast forward in 2023, India has been one of the best performing emerging markets as well for the same reason. So I think if you are an emerging market investor, and there is, of course, the primary target for our conference over here, India and India equity offers a possibility of creating alpha for them. And given what is happening with the rest of the investable universe in the emerging market space, this actually gives them a lot of ability to create that excess return. And hence, I think this year, and I would say actually for the next 1 or 2 or 3 years, till some of these macro themes remain the way they are, you will see substantially heightened investor interest in India. But I think you need to understand the backdrop as to what happened in 22 to explain what currently we are saying in 23, which sets the stage for next 2 or 3 years.
Got it. Does it, Kaustubh, do you think that has influenced the thought process of the really long-term investors as well? That maybe all of them, obviously everybody's heard about India with the size that we have, but just the fact that it's an investable market, some of them looked at it, India, but then some of them basketed India only as one of the many investments that they have, but without taking an active look at it. And now they want to take an active look. Is that something that is happening as well?
That's not true. I think the long-term investors and the largest global investors, so if you look at the 25 largest global investors, they've always remained very relevant and active participants in India. So I think that has not changed, and that narrative has not changed. I think what you're saying is a substantially different pools of capital which are being created within these investors as well, because number of these investors have now to look at different strategies. So if you're an emerging market investor but a global asset manager, strategies ex-Japan, strategies ex-China. So there is a lot more focus, and therefore that capital is tracking, I think, India much better than before. Okay. So it's not as if the investors are new. It's the same large mega investors which are there, but the themes in India are equally stronger for them to follow and therefore invest.
Okay, so the mega ones notwithstanding, is there a sizable interest from different regions, if you will? Are you experiencing that, maybe not just at the conference, but the last 12 months, maybe different sets of investors from different kind of geographies and different nature coming in?
I think not at the conference.
Not at the conference.
Having said that, if you look at private equity, because a large important part of what happens in India from an investment perspective also comes from private equity.
Right.
2023, we have seen at least 5 or 6 large global private equity investors who have done their typical Asia LP tours which they tend to do in either Hong Kong or Singapore, number of them are actually moving those LP2s into India. So this year, we have had numerous interactions with the big LPs, which come from not only US, but from Europe, from Canada, from Latin America, and Nordic countries, who are equally active as big LP investors in these private equity GP companies, who typically would have visited other parts of Asia as a part of their Asia tour, but many of them actually have visited India. So I think on the public equity side, what we are seeing in the conference is one, but on the private equity side, what the GP world is saying with the LPs is the same narrative, which is a lot of investors, certainly in the LP side, would like to understand India better, because historically they have not had direct interaction or exposure to India, but their GPs have been super active in investing lots and lots of capital in India. So two different narratives.
And in some sense, that's not surprising to you.
That is not surprising.
Got it. Okay. Now, at the conference, large public listed market participation, if you will. I heard you say on the credit side as well, and with the India inclusion in the JP Morgan Bond Index, maybe that or in some sense get it. And I also heard there is about 12 or 13 private companies as well.
Yes.
So in some sense, that mix of investors who want to look at all three aspects, listed, unlisted, and credit, is widespread at the conference.
That is true. Okay. And we want this conference to offer that ability for investors to get an exposure to what's happening across the India theme, because equities and public equities is one stack, of course, which is super important, and that's our primary equity research coverage. But then I think what's happening in some of the larger private companies, because if you have 80 to 100 unicorns, which are there in India, which means a lot of what is going to happen in the public market is of great interest to these investors. And therefore, to the extent they can get an opportunity to interact with the private companies, I think that's also the excitement.
Got it. Because there are some developments which naturally happen. I mean, we've seen fintech, tech, etc., being at the forefront of news flow, at least, what with AI, etc., so on and so forth. In India, there is a lot of narrative around manufacturing, production-linked, incentive-based beneficiaries at the fore because of the foreseeable capex drive benefits that could come in. When people ask you about what is it that you find the most promising, and when I ask you about what is it that investors have asked for the most when it comes to listening at your conference, is there a marriage out there?
There is. So I think investors are quite keen to understand. Let's start with the manufacturing side. Investors are quite keen to understand this whole China plus one strategy in the narrative that we have, what implication it has for the export-oriented manufacturing companies that are there in India, which is an important aspect, because those companies are in a much better position to actually benefit from this narrative as compared to new companies or Fortune 500 companies who do not have an existing manufacturing presence, who are also trying to address the same problem. Because the timeline with which the existing companies, which are export-oriented, can benefit from and invest in capex and other things is going to be driven by that. And I think one other part of our business is also the mid-market coverage. So we cover almost 50 companies on the mid-market side, on the banking side. Number of them, so I think number of them are in the export sector. And we see, in fact, the primary green shoots or advanced capex plans coming from these segments. Actually, this segment is going faster, and number of them are almost investing 100% of their EBITDA that they're generating in this year and also in the next 2 to 3 years on the next phase of capex. So the capex cycle is already started, and that's the first narrative. The second narrative, and your question was in relation to fintech and other areas, and what are investors interested in that, right? So I think on that one, what we again need to appreciate and understand is, with a lot more clarity in terms of how account aggregators and digital lending platforms, given the RBI clarifications on how credit can be originated on the digital side, all of those I think have been done in 2023. So what it also means is that given the customer propensity to use digital tools for accessing different types of financing products, including borrowing requirements, there is a lot more visibility on the business models for some of the fintechs, which probably the market and the companies also did not have, let's say 24 months ago or even 18 months ago. So I think what you're now saying for a number of digital-oriented financial services companies is there is a lot more clarity in terms of business models that is emerging. Therefore, revenue model that these companies have, which is emerging, which is interesting from a prospective investor side. And the second thing is banking in India in general, both the public sector banks and private sector banks have embraced digitization. And they are also starting to talk about actively their own journey on digital financial inclusion and how they're driving the business. So combination of that is you're getting a lot more information from the existing listed banks and NBFCs.
Yeah.
You're getting a lot more clarity on the business model for the companies which are in the private space on the fintech side, including some of the listed fintech players. And in general, a combination of these two is making this whole sector very, very interesting from a prospective investor.
What is exciting you the most within this space?
I think fundamentally in this fintech space, it will always be, which is the most promising credit origination, distribution, and holding model, because that's where the largest revenue opportunity in India in the medium term is likely to be. So I think to me, a large amount of value is going to be created in that side. The second largest amount of value creation will, of course, happen on asset management and asset and wealth management. Because I think as India grows, this wealth and wealth that will be created across all sorts of income streams of people, right, ultimately needs to be managed in a very efficient manner. So I think the second most interesting area will be asset and wealth management, but more importantly, the digital avatar of how asset wealth management services are offered to customers, just given the massive growth in the assets that will take place as your market cap goes from 3.8 trillion to 5 trillion to whatever, 10 trillion, all of those things. But commensurate with that is this massive increase in asset wealth management. And then there are other segments and other categories as well. So credit analytics. So all of those other things which will happen will also be relevant. But the most, one of the other interesting aspects is with all of the digital stack that we are creating, is there a time horizon in the next 2 to 3 years where you will see such smart business models which are going to be created in India with the digital stack that we have, which will be relevant for other markets as well? So right now, while we are talking about local in terms of all of these business models, etc., but if the capabilities and the IP is there, and if these companies are actually ultimately going to create IP, what we need to see is 4 or 5 years down the line, what is the prospect of some of these companies with IP in international markets where opportunities are equally interesting.
Yeah.
But it is not happening now. But I do foresee that happening after 4 to 5 years.
Very interesting. Okay. Last 1 or 2 questions. One is this uptick in M&A activity, albeit in select pockets, but the uptick in M&A activity that we're seeing, and large one at that, and maybe the corporate deleverage balance sheet lends itself to either capex or M&A or a possibility of both. What is your view on the same?
Yeah, so I think on the M&A side, if you look at it, India this year, when we look at the numbers, the total deal volume is about $100 billion for M&A in India. We definitely think this $100 billion can get to $150 billion, so 50% higher, probably next 3 to 4 years. And there are, again, number of reasons and drivers for that. Part of it comes to number of families who are in the second and third generation of the businesses are and listed or private in whichever manner are thinking through what is the best way in which they want to be involved or not involved, which is why you see a lot of strategic transactions where substantial minority or control stakes are being offered to private equity or other strategies. So I think that theme is important. Because I think there is this realization in number of businesses or number of family offices which is coming as different generations decide what they want to prioritize, and they have professionalized their businesses and operations to see whether they also want to be substantial shareholder or they want to diversify and do more of investments and other wealth management activities, which is my earlier theme that I discussed. So that is, I think, one important driver for M&A. The second important driver for M&A is India will see a lot of investments led by the government in public infrastructure, whether it is roads and renewables and other areas and energy transition. But I think that entire energy transition theme, whether it is on the auto side, electric vehicles, two-wheelers, four-wheelers, and that entire chain and battery, and equally, I think on the energy side, which is solar and hydro and pumped hydro and all of that. These are and roads. These are very substantial asset-heavy capex projects which require capital and which will ultimately get either private capital or M&A. And this is also an area where there is a big advantage to scale and having better cost of capital compared to others. So consolidation is a natural corollary in terms of how the sector is organized and therefore what we will see which will drive M&A. The third one is do also remember that number of IT services and other services companies, including healthcare services, are all owned by private equity. So the moment you see in an economy private equity being an important owner of assets, given I think the finite life in which they are organize their own funds, etc., M&A will also be an important consideration for those as well. So I would see private equity and some of these larger themes to be primary drivers for M&A in India.
Interesting. Last 60 seconds before I let you go. The risks to what seems to be a good story in India, albeit with all the global issues that exist. But what are the biggest risks?
I think the risks, if I look at it, the risks are external. So it's the collateral effect of what could happen because of geopolitics, collateral effect of what could happen because of interest rates being higher than what I think we can absorb, collateral effects of crude being at a different level than what it is. So I do think net India is still integrated very well, given I think our export and service exports and manufacturing exports with the global economy. So we just cannot ignore that the negatives to what I just discussed will primarily come from external. I don't think there are any meaningful internal risks which are there that we foresee.
Got it. Kaustubh, such a pleasure talking to you. Thank you for having us at your conference again, and all the best for a successful next 2 days.
Thank you so much, Niraj.
The pleasure was ours.
Thank you. Bye.
The pleasure was ours. Viewers, thanks for tuning in.
Thank you.